we're taking a look at the bigger picture. Joining me right now, Dryden Pence is with us, Chief Investment Officer at Pence Capital Management. And we were just talking, we had a record on the Dow today, and now the Dow's down 500 points, Dryden, led by IBM, Salesforce, NVIDIA, Microsoft. There's this rotation out of tech today. What do you think is happening here in 2026?
Well, what the action going on right now, I think, has to do with, we had such a strong 2025. Everybody's repositioning for the year. You didn't sell at the end of last year, and now there's some selling going on. As people look at tax policy and stuff. But when we look at going forward for the rest of the year, there's really three things going on. We think that there's tax policy. We think that there's going to be larger productivity. And we're going to think we've got monetary policy. So you have fiscal policy, monetary policy, and industrial policy, all three lining up to be highly stimulative going forward.
So those are the tailwinds.
Absolutely.
So do you think that stocks end higher in the back half of the year, like in the fourth quarter, we're going to be higher than where we are now?
Oh, yes, we do. Yes, we do.
Led by what? What kind of stocks will lead the way?
Well, I think it's going to be, you're still going to have the Mag 7, but I think you're going to still have the 493. The rest of them come, because here's what people haven't paid attention to yet. We've got $790 billion worth of stimulus coming into this. That's combining all of the excess withholdings that people are going to get back when they file their taxes, plus the tax cut of the great big beautiful bill. So $790 billion. That's almost as big as the $860 billion that we pumped into the economy during COVID. So if you think about the magnitude of the stimulus, both for the markets, for consumers, for everybody, there's a lot of money coming into the system.
And how do you feel about Kevin Warsh being selected as the new Fed chair?
I think it's a good selection. I think the market kind of overreacted a little bit, thinking he might be hawkish and things like that. But opposing QE versus being a budget hawk is really two different things. And I think we probably do get 1 to 2 more cuts in interest rates this next year. Maybe it happens in June, maybe after. We can wait a little bit on that. So I think that it's good to have someone who's been a long time participant in the markets and has done this before.
Yeah, when President Trump sort of gave us a hint that he would be announcing someone soon, he said he was almost Fed chair last time, and that really led people to think of Warsh, because I guess he really could have been the Fed chair instead of Jay Powell at that time. But he's had, time as a Fed governor. It was 2006 to 2011. He's worked on Wall Street. So the finance community certainly knows him. Do you feel like he brought some normalization to the markets or stability to the markets on Friday? I know we had some selling and sort of rejiggering. Does it feel like that wild card is taken out and we sort of made it through?
I think everybody this time is looking for all the adults in the room. And I think that he's one of them. And working into policy, going through all of these things, and being in a position where you have some expertise that has been through all of these rotations and the growth and what happens in the markets, I think it's good to have a steady hand at Fed chair as opposed to someone who's never been there before.
So at this point now, it's interesting that you have Microsoft, Amazon, GE Aerospace. The interesting part is the Microsoft stock. A friend of mine who's a trader, I asked her how she's doing. She said, well, not so great. I picked Microsoft as my stock of the year. And so I had a guest on today and this week after the Microsoft sell-off who said, I'm buying. What do you say about Microsoft, which sold off, 10% in a very short period of time? There was concern about cloud. We know AI spending is real for Meta and Microsoft and all these names, but what is it about Microsoft, which right now, I want to get a number for folks, in 3 months it's down 20%.
Well, I think that I tend to agree with your previous guest who looks at it as something to add to and something to buy. And the reason why is we're looking at Microsoft spends tons of money on R&D. They spend tons of money on development. And we're moving into this we've been building out AI, but now we're moving into implementation. You have Copilot that they're trying to really spend money on, and Azure, and they're really trying to develop these things. And so I think that they're in a position for long term, and long term now is 2 to 3 years, but where it's going to actually pay out very, very well for them. So we think that we're constructive on Microsoft at this point.
So you would buy it at 410. The high was 555.
It's got some room to run. It's got some
All
room
right,
to run.
what about Amazon? Because we'll have earnings on Amazon. That'll be on Thursday. Also with Bristol Myers, Toyota, Cigna, Affirm on Thursday.
Well, here's what we like about Amazon. Obviously, it's got part of the AI play, but AI is going to increase labor productivity tremendously. And you look at the great big companies, 4 out of every $10 that's spent online runs through Amazon. But when you take a look as they increase robotics, as they increase their productivity and all their distributions on the shopping piece of it, you're going to see increased margins for Amazon. And I think that's what's really important. We look now for companies that are going to take real good advantage of AI. It's not just building it out now, it's implementation. And if they can take that and implement that and drive additional productivity. I mean, labor productivity the last 2 quarters. I mean, AI is showing up. It went up 4%.
But productivity's been on the rise, to your point.
Exactly.
Yes.
And Amazon's got the best opportunity of the Mag 7 to increase their margins going forward in all their distribution portions of
Let's
that.
talk about GE Aerospace. Where does that fit in?
You know, GE, I mean, you're talking about almost 70-80% of all the jet engines on the like the Neo and the 737. They're 100% of the jet engines on the 737. You know, people are not going to stop traveling. Air traffic continues to grow. Demand continues to grow, and GE's on almost every plane. It doesn't matter whether it's an Airbus or whether it's a Boeing. You're going to be there. So the choke point there are the engines, and GE's absolutely dominant. They have 11 years worth of production in back orders. 11 years. They've got 4 years, a backlog of over 4 years of their total revenues.
And for earnings thus far, you know, most of the companies, I think 78% of the companies have been beating. I know sometimes we have sell-offs, unless you knock it out of the park like Palantir did today. Even if you have a double beat, you might still sell off. How are you feeling about earnings this year? Is that also a fundamental driver for growth?
Absolutely. I mean, we think earnings are going to be an all-time high. Their predictions are like 311. I mean, the point of the matter is that if earnings are at an all-time high, you're going to have a market at an all-time high. And those are just the fundamental drivers. And companies are again, this labor productivity goes up, margins expand. You have interest rates going down, so companies that have cost of carry and cost of goods sold and things like that, that lowers their costs. And tariffs are not going to be going up. Tariffs are actually going down. Look at the India deal, right? And so you're in this moment where there's just lots of tailwinds that are going to increase margins, that are going to increase profitability, and that's going to drive the market forward this year.
All right, thank you. Dryden Pence, it's great to see you. I'm so glad you were here today giving us your outlook. Appreciate it. Dryden Pence, Pence Capital Management. Folks,